afternoon. It is Angela Dansereau and
Reggie Green at Green Home Loans.
Woohoo! And we're out here to answer some questions. We've had different type of loan options come up, different buyers' questions. So we're just going to go through a list today and get you some basic knowledge. And we're going to start off today with, let's say you are on a fixed income, if you are on disability, if you are on a pension. What's another one out there that would be?
Social Security, pension. Sometimes people have a lot of money in an IRA that they 401k
yes.
rollover. So just kind of talking about how you can use those incomes to qualify for a mortgage.
Very true, very true. So we're going to go just through the basic 101. Just because you're on a fixed income doesn't mean that you can't buy a new house. I do get that question all the time, and I usually revert them over to my lender partner. Reggie, can you give us a little information on what that would look like for monthly payment? Would they need a down payment? Closing costs? What are some aspects of these different loan types they would qualify for if they're on a fixed income?
Yeah, so when you're on a fixed income, we're typically able to use the income as long as it can last for 3 years. So whenever you're qualifying for a loan, we're going to look at an income factor. It's called a debt to income ratio. And with most loan products, you have to make about double what you have going out on your credit report, including the new mortgage. So like all the debt to income ratio is the same regardless if you're on a fixed income, W-2, anything like that. So kind of just going over a few of the sources that we see a lot. Pension, Social Security, most of the time those are going to last your lifetime. We can use those, whatever the amount is before anything is taken out. If you're not taxed on it, like a lot of customers, specifically with Social Security, don't have other income and they're actually not taxed on it, we can gross that income up a little bit. And then the other one that we were talking about beforehand is a lot of people don't know about the IRA withdrawal. And what an IRA is basically a retirement account. A lot of times if you've been at a job for a long time, you're in a 401k and you'd roll it over to an IRA once you leave that company or you retire. And what we can do is, as long as you're of retirement age, you can take that IRA amount, usually it's like a set amount, and then you can create an income stream. So give you an example, let's say I have $300,000 in an IRA. What I could do is I could take out $2,500 a month and I could use that as income as long as it can last for 3 years.
Okay, awesome. So they could take out $2,500 a month, that'd be income. And if they have a different type of income, that would just be added to it, correct? So,
yeah.
So I guess what I would say is, don't think you can't buy a house or can't qualify to purchase a home just because you're not working anymore or because you are getting ready to retire. If you're getting ready to retire, you also want to reach out a little bit early. I've had clients that are getting ready to retire in about a 6-month period, and it's always good to start early to know what the best option will look like. Sometimes the lender will say, you know, you might want to try to pre-qualify before you retire for different reasons, different amounts on a mortgage, but you do have the option. So always ask questions. It's never cost you anything to ask a question, and you're always going to learn something new.
And one other thing I want to add there is there's also what we call no ratio loans. And a no ratio loan is where you're not qualifying on any income whatsoever. You usually just have to have about a 30% down payment. So there's a lot of creative options, and we're here to, understand your goals, understand what you're trying to do, and try to provide every type of solution that we possibly can to get you in the house that you want to buy.
Wonderful, wonderful. And then quick question on that. So 30% down, could that come out of their IRA or could that come out of a savings account? What would that look like? And
yeah, so let's just say you're trying to use your IRA for income like we had just talked about, but you also need to use your IRA for a down payment. Okay, so the main thing with the income source is it's got to last for 3 years. So let's say you have $300,000, you're taking $30,000 out for a down payment. As long as the income stream that we create for you is going to last for 3 years after that down payment, we can use it. Just remember, if we're using your IRA as income, you have to be a retirement age of 59 and a half or older right now.
Gotcha. So 59 and a half, and then you can use it as an income. Let's say you're 55. Is there any way to pull out of those resources, or do they have to wait until that 59 and a half?
If you're going to use it as an income source, you do have to wait until you're 59 and a half. You're actually able to take the money out of the IRA, but if you take it out of it earlier, you're going to be taxed on it.
Oh, that's right. Yep.
But we do have what we call asset depletion. And what asset depletion works for people, it's either an income source or a combo with another income source. So let's just say I had $1 million, but I don't have a job. What I can do is I can take that $1 million, divide it by 360, which is a 30-year term, and I can actually use that as income. So if you wanted to cash out your IRA and put it into an account, we could be able to use asset depletion and create an income source off of it.
Okay, awesome. And then in your experience, I know everything's going to be a little bit different. What kind of time frame should the buyers be looking at when they're trying to take out of that IRA? Is it a 30-day, a 60-day? Is it a longer period to close on one of these transactions?
No, it's actually fairly quick. Usually you have someone that's running the IRA, so we contact them and tell them what we need. Typically we need a letter stating how much money that you are going to have taken out. We have to get a statement showing the amount that you have in there, and then depending on the loan product, you might have to take one draw of that income. So usually, we can do those at the same time as a regular deal, 3 to 4 weeks, and we can usually get all that stuff put together.
Oh, very cool, very
Yeah.
cool. So it's a lot easier than even I thought.
Yeah.
Again, usually I just revert them over to the money side because I am the house side, but I do get that question a lot from clients out here. Is there a negative aspect about going that route at all that a consumer should be worried about?
Honestly, I love the route, and here's the reason why. Because you're creating a monthly stream, but once the loan is funded, you don't have to do that stream anymore. But basically what we're doing is we're showing you have enough money for the income to last for 3 years. But once you do it once and the loan's funded, you can do whatever you want. So you could call your IRA, say, hey, I no longer want to take this stream, and you could do whatever you were doing beforehand.
Oh, okay,
Yeah.
awesome. So it's just kind of a way to cover, to make sure that you're protecting yourself and that you can afford this house for the next couple of years while you're getting ready to retire or retiring.
Yeah.
So if you have any questions and you want more information on this, we are always here ready to answer those questions. Just reach on out.
Thank you so much.